Hello, everybody. Welcome to day one of Ignitify's FinTech Adventure. We're glad to have you on, and I'm thrilled to be moderating this exciting panel. And it's our first panel, our first event on AI use cases in credit unions. As many of you know, artificial intelligence is rapidly transforming the financial landscape, and credit unions are uniquely positioned to harness its potential in ways that can significantly impact member services, operational efficiency, and strategic decision making. Today, we have a fantastic group of experts with us who are leading the charge in the development of innovative AI use cases. And so, what I intend for this event to be now and going forward is really to help credit unions see the types of use cases that are being created, leveraging different types of technology. So with FinTech Adventure this time, it's focused on AI, but we'll have other ones leveraging other types of technologies in the future. So I'm excited because I was pretty impressed with the use cases that I saw these companies that are exploring and developing for credit unions. And so it's just not the chatbots that we've been seeing in the past, which is great to get started in this space. But there are other ways of leveraging this technology that I wanted to expose you to. Okay, so we will get started. Each of these panelists will have 5 minutes to introduce their respective use cases and introduce themselves. If you have questions, please put them in the chat or in the Q&A, and we'll cover them in the Q&A section. So let's get started without further ado. Let me introduce our panelists. We have Stephen Hayes from Lenders Cooperative. We have Maya Mihailov from Savvy AI. We have Nikhil Chacko from Osfin AI. We have Nick Strelacki from Glide AI and Sahara Chatapipe from Tatse. So let's get started. Lending is a fundamental service for credit unions, and AI has the potential to significantly enhance that process. Stephen, I'm going to start with you in your 5 minutes. Can you introduce yourself and explain how Lenders Cooperative is leveraging AI to assist credit unions in managing their lending operations? Specifically, how does your AI-driven approach improve risk assessments and expedite loan approval processes?
Yeah, thanks, Julie. So loading up a presentation, quick presentation here, but my name is Stephen Hayes. I am the head of data and AI strategy at Lenders Cooperative. Lenders Cooperative was founded in 2019 with a focus of being able to provide labor and loan origination software to help enable financial institutions to lend better, and particularly with a focus on small dollar, small business lending. So I wanted to give you a use case of how they're leveraging AI to enable better lending to small dollar, small business loans. So let me go to the next slide. So I want to talk about the challenges of small dollar, small business lending. So I used to be the head of analytics at Live Oak Bank, which is one of the largest SBA lenders in the country. And we always had a major challenge of actually being able to lend to the smaller dollar small businesses because of really two key challenges. And these are the two key challenges that Lenders is focused on overcoming. So the first challenge that we see is that small dollar, small business loans are inherently more risky from a credit perspective. Historically, they have about 2.5 times the credit losses of larger small dollar loans, which means that you have to have more of a credit eye on these types of loans. However, in doing so, you also need to overcome the second challenge, which is that you have to actually make your products more operationally efficient. And those two kind of don't work well together. And so building a scalable, efficient platform while also mitigating the higher credit risk is one of the main challenges with lending to small dollar small business loans. And so Lenders Cooperative attempts to overcome this challenge by integrating 15 different vendors, many of which are using cutting edge data platforms and AI technologies. But the one I want to talk about in particular is a company that I helped co-found in 2021 called Lumos Data. And Lumos Data was started with a vision of being able to build a better credit score using better data and cutting edge AI technology. A lot of lenders in the small business space use either FICO or SBSS to try to mitigate the credit risk. And while they might put that in kind of an end-to-end efficient technology platform, our experience is that those scores are just not sufficient by themselves to be able to actually mitigate the credit risk. And so we set out to build a better credit score, leveraging over 3 decades of small business data and cutting edge machine learning algorithms. And so that enabled us to use over 40 different credit, business, and economic factors to actually look at a borrower as more than just their credit score or the industry that they're in or their SBSS score. We're able to have nonlinear relationships between different features. So a business in the restaurant industry with the same credit score might get a much higher expected credit loss if they're in Subway and a bad economy than if they're a Jersey Mike's in a good performing area. What that means in terms of our model performance and actual practical is our model compared to both FICO and SBSS was able to approve more good loans and also identify more bad loans. And so what that means from a practical standpoint is that financial institutions are able to lend in a scalable way and mitigate credit risk. So they're able to do so in a safe, sound, and more profitable way. And so model risk management is very important to us while we look at some of these cutting edge models. And so the other thing we looked at is bias and fairness of our model. And so we looked at the owner's gender, race, ethnicity, nationality, and business, and wanting to make sure that our models not only were more accurate, but they were more fair than the alternatives. And so we compared our model both to a benchmark as well as to the FICO score. And we were able to show that our model exceeded benchmarks as well as outperformed the FICO score. And so Lenders is able to utilize this cutting edge machine learning model to offer more accurate and fair credit scores to enable the financial institutions to lend in a scalable way while mitigating the credit risk that small business loans present. So thank you.
Thank you, Stephen. That was fantastic. I mean, I love all that data you guys have and how it can help credit unions, even those that aren't even starting or thinking about getting in the small business space. You can leverage that data to help them determine, what services are best to offer. So thank you for that. Maya, credit unions can often operate without extensive technology resources. Savvy AI is designed to bridge that gap. So could you introduce yourself and discuss how Savvy AI empowers credit unions to harness AI for better decision making and enhanced member services? Additionally, features that your platform or that make your platform particularly useful and user friendly for credit unions with limited technology expertise.
Absolutely. So at Savvy, we decided to meet credit unions where they are. And sometimes where they are isn't extensive data systems. It's not a plethora of data or specialists or expertise. So Savvy, one of our unique capabilities is literally helping credit unions pull in advanced AI models right into their Excel spreadsheets. So if you have data analysts right now, or you have lending analysts, or you're looking at your data every single day and trying to figure out, hey, which of these loans is about to go delinquent, or which account is about to overdraft so we can get in front of them and maybe smooth it out with a temporary cash advance. All of those things can be done directly inside your spreadsheet without knowing any other technology, without knowing the ins and outs of data science. Julie, would you like me to go into my presentation some more, or?
Yes, please do.
Okay, excellent. Sorry about that. Let me share my screen. Hope you're able to see my screen right now. At Savvy, we consider ourselves a trusted AI solutions partner. Now, the reason that we're so familiar with AI and financial services is because myself and my co-founder, Alex Mueller, and in fact, most of our team came from leading an AI division inside of Synchrony Financial. And there we are able to build and launch products that use data to provide AI-enabled solutions and intelligence for both the banks and credit teams. But many credit unions ask us, great, so Synchrony can do AI, JP Morgan can do AI, but can AI really bring value to my credit union? The answer is unequivocally yes. You're already sitting on an absolute gold mine of data, your transaction data, your deposit data, your lending data, all the data you already have can be mined for insights to reduce your cost, save your team time and effort on doing everyday tasks and increasing your member value. But traditionally, mining that data with AI was complex and costly. It required data scientists, data teams, custom infrastructure. No one has those kind of resources on a day-to-day basis outside some of the big guys. And that's where Savvy comes in. We deliver AI solutions to you from ideation to implementation. We become your AI center of excellence in a box. We do that by providing tools and services that can unlock the data you already have and give you recommendations and give you insights to accomplish your goal. And what's great about Savvy is what you don't need. You don't need specialists. You don't need custom infrastructures. You certainly don't need a boatload of money. And you don't even need integration with your core system. There are many different ways where Savvy is working with financial institutions like banks and credit unions, such as in risk reduction, forecasting delinquency, predicting lending loss, fraud, compliance and forecasting, helping with SARS classification, risk modeling, compliance automation, and even growth in member services, segmenting audiences based on life stage so you can offer them better, more personalized services, offering you forecasts on which members are about to churn, and so much more. And what's really great about Savvy, as I mentioned before, you can do this all in an Excel spreadsheet. We actually won Best of Show for this. We are coming to you where you are, where your team is. So if your team is currently working in Excel spreadsheets to do this kind of forecasting analysis, instead of spending tens of hours a week, they can literally, as you've seen on the screen, do this in a matter of seconds. In addition, because we came from a highly regulated institution, our entire platform and services offers you complete data ownership and security. We're SOC 2 Type 2 certified and regularly pen tested. We give you complete model transparency. You got to know how these things are working and why they're making these decisions. We even give you audit trails so you can validate individual decisions, making sure that they're correct by your banking practices and your credit union practices. And finally, we give you guardrails, ensuring that the AI plays within a sandbox in which you're comfortable. We have worked with quite a number of financial institutions, and as one partner said, the tools are intuitive and the team is supportive, partnering truly in their success. So if you're looking for a partner in results-driven AI services, you don't have additional resources to spare, you want somebody who's trustworthy, transparent, and can use the tools you already have, including your Excel spreadsheets, I really encourage you to reach out.
Thank you. Nikhil, operational efficiency is crucial for the smooth functioning of credit unions. Osfin AI focus on AI-driven operational solutions. Can you introduce yourself, please, and elaborate on how Osfin is transforming operational workflows and can help credit unions in this area?
Sounds good. Thanks, Julie. By the way, if my slides get stuck at some point, please do let me know. Just a quick introduction. I'm Nikhil. I lead strategy and growth here at Osfin.ai. Come from a background in healthcare and in the nonprofit world, actually. So very excited to be here and very excited to support credit unions, actually. So I'll go on to sort of set some context here, right? So it's widely recognized that attracting new members and increasing share of wallet is a top priority for credit unions. and part of that is kind of having a focus on digital services and allowing younger customer or younger members to participate in credit unions. And we see this across, the financial industry. But a second order effect of that is that as the number of digital transactions and your partners increases, these are very likely to strain and often break some of your legacy operational processes. So the image on the right is a little bit of a playful kind of take on what we see sometimes when we go and meet customers. So there's a lot of focus and investment on the front end of the member experience, but if you look under the hood, it's all maintained on Excel sheets with an army of sometimes very frustrated financial operations folks. So Osfin.ai is a financial operations platform that automates some of these repetitive manual processes on your financial operations teams. And we start with transaction level reconciliations because we consider that as the smallest unit of your financial operational flows. I'll tell you a little bit more on what we see and very tactically the kind of issues that lead to some of this dysfunction. One is that Excel, as the number of as scale grows, is often not the right tool to handle this large volume of data that's coming in. Two is inconsistencies when you work with partners. So it might be a payment gateway, it might be a fintech. You're trying to reconcile and match transactions and track your funds through these channels, and data is inconsistent, files are different formats, the way they name their columns, etc., are different. So a lot of complexity and variation there. And the third one is exception handling, which is sort of the main goal of reconciliation, is often manual and is done on a flurry of emails. What this leads to is basically three or four kind of core issues for credit unions. So one is revenue integrity, right? So things like, are you paying the right commission to some of your partners or maybe even a payment processor? Second is productivity of your teams. So instead of focusing on higher value, strategic, long-term goals, are your financial or your CFO's team stuck and mired in some of these operational challenges? Three is compliance. So, this is in banking, but, the recent Synapse and Evolve issue is actually directly related to reconciliation issues at the bank. And, I think that often can also happen at credit unions. And that's something to be, wary about as you follow this digital transformation paradigm. And the last one is member satisfaction. So, every interaction around, say, processing a refund and the time that you take for it has a direct correlation on how satisfied members are with your service. So, I'll talk a little bit about the platform. So we are an end-to-end platform to handle reconciliations, starting with integrations with your core banking systems, your LOS, LMS, all the way through to how you handle exceptions. So there's an integration layer. We configure custom rules for you, and then we automate the process. We look at AI and ML more opportunistically. So, we want to be able to deploy it where it makes sense. So, for example, in the ingestion layer, we use NLP techniques to map the schema of data that's coming in from different files that you have. So that's somewhere we directly apply AI. So, and sometimes we also go a little slower. For example, on the last step, say on the exception handling issue, there is an opportunity to apply AI agents for that. What we see is customers are not quite ready to hand that off to an AI agent as of yet. So there we take a more sort of slower and incremental approach. A little bit more about the company. We process about 500 million transactions on the platform for financial institutions now. We've recognized by KPMG as globally being one of the fastest and the most accurate platforms for reconciliation. Customers that work with us get to value in about 6 weeks, and in about a year, we see about 4x ROI. And then we have leading investors and offices in India and the US. On the right, you see the kind of customers that we work with. So we work with legacy banks as well as newer fintech companies. And before I end, as you'll notice, we actually currently don't work with credit unions. So we are looking to partner with innovative leaders who are seeing this back office issue coming up, or maybe CFOs who may be seeing some of these issues coming up. So I'll end there. I'll be at Money 2020 if anybody is traveling, and hope to meet in person. Thank you.
Thank you, Nikhil. It's great stuff, especially on the reconciliation side. And we have, a lot of systems, a lot of data. I can't imagine some tools like this to help credit unions in this area would be fantastic. Nick, delivering exceptional member service is vital for credit unions. Glide AI focuses on enhancing the payments ecosystem with artificial intelligence. Can you please introduce yourself and explain how Glide integrates AI into the payments process?
Sure, and thanks so much for having me, Julie. And it's great to be here, everyone. So excited to connect. My name is Nick Sterlacci, and I'm the founder and CEO of Glide AI. And today we'll be talking about AI agents. So while I pull up this deck, just think about your thoughts on AI agents, and we'll most likely get to them. So we're good on my screen. So essentially, what we're building here at Glide is the financial infrastructure for AI agents, and that means a little more than buzzwords. I ask you to think about this for a second. It's expected that AI agents are going to be the next way consumers and businesses interact with technology. Ask yourself, do you find yourself going to ChatGPT instead of Googling something? When you're preparing for a presentation, you go to ChatGPT. That's your AI agent. And you're seeing all these AI agent companies emerge, like Y Combinator. About 80% of their companies that come out of there are AI agent companies. So AI agents are here to stay. And essentially what we're building is a tool to make AI agents actionable. So it's expected that transaction volume for AI agents is expected to be 100 times greater than that of humans currently. And the reason for that is because AI agents work 24/7, whereas humans do not. So that's what we're building here. So as it relates to the member experience, I'd like you to think about it. I'm sure a lot of the credit unions on this call and a lot of credit unions in general have implemented some sort of large language model into their member experience. And I'm sure it does a lot of great things. It gives them information about your products. It can answer questions that the member may have. But I want to kind of say what we're doing here is making AI agents actionable. So think about it this way. Members are already used to large language model native products. They're going to ChatGPT. A lot of the new software tools that for businesses and consumers are now large language model centric as opposed to dashboard centric. So they're used to this large language model dashboard. And this AI agent can almost work as someone in a branch. What can I do for you? In natural language, a member can say, can you transfer $500 from my checking to my savings account? Similar to a teller at a branch. And that agent would execute that transaction. Similarly, they can apply for new products, such as applying for a loan using natural language, applying for opening up a savings account using natural language. And finally, just actionable outputs for AI agents. So essentially what we're doing here at Glide is adding some action to the chatbots that everyone loves. So you can get in touch. That's my quick overview, and excited for the discussion today.
Excellent. Thank you, Nick. Last but not least, we have Sarah. And Sarah's transparency is paramount in financial services, and explainable AI plays a key role in achieving it. Tatsi specializes in this area. Can you introduce yourself, please, and discuss why explainable AI is essential for credit unions?
Thank you so much, Julie, and it's great to be here with you. Thank you all for your time. I'm the CEO and co-founder of Tazi, and I come with more than 35 years of background in AI I have lived and breathed this for a very long time, as you have lived and breathed, the credit unions. So I'm very happy to be here to share our experiences. I have a deck. Let me use that. Can you see my screen? Awesome. Okay. So we have at Tazi a predictive AI platform for business teams, especially in financial services. And what we are giving you is the ability to work as domain experts together with our platform and together with other team members and AI agents, and basically keep creating solutions so that you can do what you need to do best, which is to serve your customers, serve your members. And our platform has already been a Gartner Cool Vendor, is an honorable mention in Magic Quadrant. 33 reports actually mention us as a responsible and adaptive AI platform. We are also very proud members of RevTech Labs, Mass Challenge, and Finovate Best of Show also is one of the awards that we have been grateful for. I think team is really important. So we come with AI, business understanding, go-to-market, and technology at our core. And our platform and solutions have been used to create value really rapidly in a matter of days. You can increase your efficiency from 30 to 300%. And people have created more than $20 million of value on this platform. So there is huge value. So whenever I wake up every morning, I'm thinking, who is not creating $20 million of value this morning? And the question is, how does this happen? So one of the things we found out is AI is a great tool, but everybody, you as decision makers, when you use AI, you want to make sure that it is behaving up to your expectations and it is doing what you expect it to do in the right way. So I'm going to show this as an example on like what we mean by explainability, what we mean by ease of use on a very specific solution. We decided to focus on ideal customer retention and acquisition solution because we found out that if you know what your customer needs, what their risk and profitability is, then you really understand your business and you can actually manage your business, take your daily actions to grow your business in the right direction. And you can also manage and avoid risks that way. So what's happening on the screen is I have a dashboard, and this is basically allowing me to see what could I offer to my customers as a product. And I'm able to see what my customers say. This is simulated data, what my customers say, what they are talking about. Is there a risk of churn? What is the balance of my customer? And do they need a new product? In this case, this is the credit card score, but the same applies for maturing CDs, mortgages, anything you really want to offer. You could add multiple products here. And in this case, these are created using a generative AI model, a large language model. These are predicted using AI models. And I'm able to see all of that at my fingertips right now. And I can take my actions. I can decide whether I should be offering something to this customer or not today or not. And all of these are real-time predicted for me. So how do I do it? To do this, you need a business analyst. We found out that business analysts are great people who understand data and business at the same time. And we have put all of this into our platform, all of the solutions into our platform. I'll show you what the retention solution looks like. So all you need to do to use an out-of-the-box retention solution is you check what kind of data it uses. I have here a wealth management actually retention solution. I have things about my customer, my account, who is selling, the partners that are helping me. And also, all I need to do, I just hook up my data and change the source. And we have a lot of different ways you can feed data in, from files to another AI model. We can connect AI models. You can connect AI models, and you can have access to many different databases, including Snowflake. So after I put my data in, I can look at the dashboard. So we found, as part of understandability, we found the dashboards to serve our customers really well. You can see what is the return on investment. Again, I'm here spending this much money to take actions, and under 3 different simulation scenarios, I could make 2 to 4 times the money I spent. I have an accurate model, and the models are using these variables. And simulations, looking at all the predictive variables, everything are here at your fingertips. And here are also things to feed to my CRM or to Excel files if you want. Also, you can export everything from here if you want. And in terms of explainability, another way we are explaining models is, so this assures there is ROI. This assures that the data that gets in is the data that I expect to get in. The models don't behave funny in different places. You can really shake your models. And another way we create explanations is through dynamic segmentations of your customers from the lens of churn. So you can create dynamic segmentations for expansion, risk, price elasticity, you name it. This is just an example. So you are seeing what the models use as variables, as well as the segments of churn. This is, you're able to see that my customers churn most of the time if I send email, but under a different scenario, they may not churn. But we also offer you not just explanations on a screen, we offer you the ability to reach in and say, you know what, I don't think those customers will remain with me. So you can just go ahead and be a human in the loop. You can say, you know what, AI model, you have been trained on this, but this is the past data. In the future, this is not going to happen because of inflation, because of something else. So you can give AI feedback seamlessly through these interfaces, and it can start learning from your feedback right away. And the last thing, everything is transparent. So you have everything in your fingertips. Your business analyst can go in and say, what has been used? What are the parameters? Can I bring my own AI model and compare to this thing? You can do all of this. You can also do generative AI, again, very seamlessly, just using your prompts. So all of this is easy, and you can train your teams to do that too. So I'm probably out of time, but so that's about it, Julia. Did I run out of time?
Oh, no, you're right on time, Sarah. So thank you for that. And again, thank you once again to all of our panelists for your valuable insights. It's really inspiring to see how AI can really drive positive change in credit unions. And hopefully within the audience, you're starting to think about other ways AI can be leveraged in your respective organizations as well. Now we're going to shift gears a little bit and start targeting more specific questions for the panelists. And this is where the audience participation comes in as well. And so I have a few targeted questions for our panelists to dive deeper into their expertise. But with that said, I'd love to hear from you too. So again, please put your questions in the chat or in the Q&A section section of the menu. And if there are specific questions that you want to make to one of our panelists in particular, please indicate who you'd like to have answer that question for us. So let's just jump in with our first question. Stephen, I'm going to go back to you since you started us. So implementing AI-driven lending tools can sometimes face resistance from staff accustomed to traditional. How is Lenders Cooperative addressing change management to ensure a smooth transition or adoption of your AI solutions?
Yeah, that's a great question. And so obviously change management, especially with newer AI technologies, is a challenge. There's kind of an incumbent advantage, especially with like regulators, if it works or even if it doesn't work, if you can explain it to a regulator or you keep it the same year after year, that's sometimes easier than trying to change to a new, potentially better solution that requires a lot more explanation, risk, et cetera. So several things that we've done to try to address that. So from a Lumos credit model perspective, we have a heavy emphasis on model risk management that aligns with both data science best practices, but also regulator expectations in terms of what they want to see from model risk management, with a big emphasis on explainability of models. So a lot of the credit models can be somewhat black box. You don't understand their validation, what kind of data they were trained on. And that's a major kind of issue. So I know when I was at Live Oak, we tried lots of different models and we would ask questions to get a sense of validation. And a lot of times those were proprietary and they couldn't be shared. And so we would get a score and we would go to apply it and it would not be predictive at all in our portfolio because it was trained on leasing and had no chicken loans in its portfolio or in its actual model. And so being very transparent and having very robust model risk management is extremely important to us. We also do back tests on portfolios so they can actually see how the model would perform and kind of practice on their actual historical portfolio. But even at the end of the day, what we generally have to do is run the model alongside their existing process for a while to get them comfortable before they can completely change over. So multiple different things have to be done, but I think, people being scared of new technology and just doing nothing is not the right approach. I think you have to do it in a safe and sound way. And I think there's a lot of different companies and people that can help do that. So.
Yeah, I totally agree with that. And I love the approach of the side by side, because oftentimes I hear of credit unions making significant investments in technology. And, it just, we're risk adverse. We don't like change. And sometimes new technology can feel a little threatening, but it provides so much value. And otherwise you wouldn't have invested in the first place. So, helping credit unions in making that transition is so important in any type of technology. Thank you for that. Maya, as savvy AI empowers credit unions to leverage AI without the technical expertise, how do you support the ongoing training and education to ensure that the credit union staff can effectively utilize the potential of your platform?
Absolutely. So one of the ways that we support it is we have a robust client services function where we go in and we help, train you on what kind of models are great to build, what kind of data you have, how that data can work in a model. And we stay with you throughout the life of the project. So it's not like watch some YouTube videos and good luck with that. Like that's not supportive at all. That's not what credit union needs. Right. Credit unions need an actual partner that stays with them. And so a lot of what we do is education and training, but we start most importantly with a use case workshop. And I can't stress this enough. It is really important for credit unions to sit down and identify where AI can help them solve problems and where it's just kind of gimmicky, where like sprinkle some AI on that does not really work to solve their goals. So the first thing we do is sit down with the credit union. We do a use case workshop. We sit down with various stakeholders and identify places where they already have data. They have a reoccurring business problem, and that business problem is a good fit for AI. And then we take it from there.
Awesome. I mean, that is one of the reasons why I love what you're doing at Savvy AI and how you can really help credit unions get more accustomed to AI technology, and just be their partner and walk them through this whole process. This is new for everybody in a lot of cases, and just knowing somebody's there just not to let you hang out to dry is often welcome. Nikhil, with AI technologies rapidly evolving, how does Osfin stay ahead of advancements to ensure your operational solutions remain cutting edge and continue to meet the dynamic needs for credit unions?
Yeah, absolutely, Julie. Thanks for that question. We have this unique advantage of working in a space that is fairly, manual, and fairly sort of underdeveloped in terms of sort of technology investment. So, especially kind of so towards the smaller financial institution kind of segment. So, like I mentioned in our in the presentation, like our approach has been to opportunistically go after areas where we can use AI. And so, for example, things that we learn from our users is what we then go and follow up and try to see if there's a better way to automate it. So things like schema mapping is something that we saw customers struggle with, and then we kind of went and looked for the appropriate technology that could address that. And in this case, that was an LLP use case. Um, so, I mean, for at a very high level, that's sort of our approach. We are not looking to apply we don't have a tool that we are looking to apply, where we can, whatever we can find. It's more sort of a pull mechanism than a push mechanism at the moment.
Awesome. Nick, data security is paramount in payment systems. So how does Glide AI ensure the security and the privacy of transactions processed through your payment solutions? And what measures are in place to protect them against threats?
Yeah, Julie, thank you. Great question. And I think that's the best part about Glide AI is we leave our transactions to the credit union's infrastructure. So what our product is we're an AI agent ourselves who just works on behalf of the credit union in an API first product where we're just an actionable agent. If a member says do this, we're going to do this, but leverage the security and the compliance of the credit union's existing infrastructure. A good example of this is money movement using natural language. We have to recognize that consumers are now used to large language model and actionable AI. Now you could even go to Netflix and say, I'm looking for a rom-com for date night, but it should be set place in New York City, and they'll give you a Woody Allen movie. So that was besides the point. I'm sorry. So essentially, people are used to actionable AI and used to getting what they want out of AI very quickly. But chatbots are not really scratching that itch. So if a member says, transfer 500 from my checking to my savings, our AI agent will facilitate that process, but remain secure on the credit union's infrastructure.
Amazing.
Yeah.
Zara, integrating explainable AI can require some additional resources and adjustments. How does TOTC ensure that the implementation of explainable AI is both effective and efficient for credit unions, minimizing disruption while maximizing transparency?
Thanks, Julie. Explainable AI actually has been around for a long time. I mean, data scientists, machine learning experts have created AI explanations, but they have not really been serving business users because, I can talk to you about Lime explanations, Shapley explanations, and they don't really tell you how you are going to be using that AI or generative AI model, and also whether there are any risks or not. So we decided to look at the explainability in a number of ways. One, we created a surrogate model that explains what's going on with the whole AI solution, not just model, but everything else around it. And the explanation model acts like that segmentation tells you what's happening with the AI model, but it's also an interface that actually lets you speak back to the AI model. So you're able to give AI feedback, as I have shown you, but you're also able to divide your whole complicated world of thousands, hundreds of thousands of customers into segments where you can take actions. And then you can also combine those segments. You can say, I want to find profitable and high churn risk customers. Those are my priority today. So you can actually drive your business in the right direction every day because you are utilizing those explanations. And the final piece is I can explain something to you, but then what if I don't get that feedback? So we decided to make everything transparent in terms of how AI works and easy to use. And we give training to our customers as well, so that either our team or your business analyst can easily go in and correct when something goes wrong with AI. It's not if something will go wrong with your AI. Something will go wrong with your AI, as something goes wrong with anything, right? So since you built the whole solution together, you know how it is built, since you were at the table while it was built in an iterative manner, you know if something is wrong, and you also know exactly how to fix it really, really rapidly. So we are looking at explanation, not just a language that is spoken to you, and 80% of it you don't understand. We look at it as a mechanism that you can adapt, and we are giving you dashboards, that surrogate model, and all of those interfaces, so that you can actually simulate a lot of different things about your AI solution as a whole, and fix them really quickly if something is wrong. And as I said, you have to keep an eye on your AI, and your eye is the best eye. Believe it or not. I mean, even if a person who has a PhD in AI will not see if something is wrong with your AI, then better than you would see. So because you know your business, and you want AI to walk in the path that it should be walking, to create value for you and to also have minimum risk. So you have to look at your AI just like you look at your children. You look at your elderly. AI is a kind of ecosystem, part of the ecosystem, and we are providing the communication language between you and AI for very specific solutions, I must say also.
Interesting. Thank you. I want to encourage more credit unions to ask us some questions. There's a couple in the chat that we'll address here, and one of them I actually have on my list as well. So that's around key metrics. So what key metrics should, and I'm going to open this up to everybody on the panel. So feel free to take on this question, whoever wants to respond to it. But what key metrics should credit unions track to evaluate the success and the ROI of their AI initiatives? Michelle was like, how can you create like a 4x ROI? And how can these metrics guide future AI strategies?
Julia, maybe I think Michelle's question was in response to my presentation. So I'll answer that question first. We think of ROI in two ways. So one is because we're an automated solution, how much time are we saving for your teams relative to what it costs, right? What it costs to work with us, and so that's one part of the numerator. The other thing that's actually a little more surprising is things like revenue leakage. So at one of our customers, because we were automating transaction level reconciliations, we were able to see that they were paying out the wrong commissions to a certain partner, and so we were able to save that. At another place, we saved a penalty that they were paying for not refunding customers in the stipulated turnaround time. So there's multiple sources that stem from how we kind of automate and bring accuracy to something that was traditionally manual. So that's the answer to the 4x question. And more generally to the question around how you would measure ROI for AI. I actually think it's very specific to the use case, right? I mean, there's no at least from our perspective, it's very specific to how your financial operations team is structured and what's the outcome you're seeing there. And in our case, it's time and leakage that we measure. And I assume that's similar for the other panelists, but would love to hear from them as well.
Can I add something, Julie?
Yes, of course.
So we are seeing efficiency gains, in almost all of our use cases. We are looking at customer retention and fraud detection solutions, especially. We are seeing efficiency increases as a huge way to get ROI. but also new business. I mean, like the ability to look at your business from your business KPIs perspective, because ROI is related to KPI, right? So whatever is your KPI, being able to guide the AI models with the right business KPIs and with the right labels is making a huge difference in our use cases so far. Usually we are also seeing an initial huge return investment. So usually I have rarely seen someone who looked at their data or the way their business goes with the lens of the AI models and not be surprised. So we are usually initially seeing a huge jump in terms of the way you look at business, you do business, and then there are always additional ROI gained in that use case, and there is almost always new questions, new ways of doing business. And your teams actually, they learn, they are a part of this, and they actually become parts of the new processes. So you actually transform your processes into another flow where AI is doing the repetitive tasks and you are making the more important decisions. And we have seen that again and again in a lot of customers. And lastly, today, actually, AI can use our AI, actually. The demo that I have just given to you, today my CTO has shown me that Cloud, which was demoed yesterday, can use Tazi to create solutions for you, actually. So there are a lot of efficiencies to be gained in terms of the way AI is implemented as well.
Yeah, I can't imagine. It's like once you start leveraging this technology, what could happen next, right? It's like you just have to first get going, right? And start experimenting with it and what it can do. And pretty soon you're collaborating on additional use case, and then it just snowballs from there. There's just so much power in this technology that I consider this to be pretty disruptive in our space. And there are other technologies like this that are here now or coming in the future. So that's great. Michelle had another follow-up question relating
I think Maya
to.
wanted to add something. I think Julie, I just
Sure.
did you, no, yes, no, Maya, no.
Oh, sure.
Okay,
Thank you, Zara. No, I loved your answer. I love Nikhil's point of view. I just wanted to add, the biggest question you should ask yourself when solving a problem is is the juice worth the squeeze? Meaning, if you can solve a problem with AI, but it costs you as much to solve the problem with AI as just not solving it at all, then that's a terrible AI use case. I mean, you should be looking for measurable efficiency for the cost and time that you're spending using an AI system. And it's the same thing. We all have to stop treating AI like it's this new technology animal and start evaluating it in the same way that we evaluate other technology purchases, which is what problem is it solving? How much does it cost to solve it? How much am I going to gain in, efficiency, time? How much am I going to spend less on problems like fraud or ACH returns, et cetera? Because all of that can be measured. You just have to kind of lay down the foundation in measuring it.
That was a great ad. Thank you. Michelle had another question around fraud AI. How does fraud AI work? Anybody want to take that one?
Sarah, I know you want to go in there.
No, I spoke too much though. So I mean, I can be the second person to respond. I mean, the way we looked at fraud, I mean, actually, I thank you so much. I really wanted to talk about this. After the TD incident, I was like, the announcement was, for me, it was an eye-opener. It was like, if you choose customer experience, you have to not choose fraud. I mean, it's like there are two things that are competing against each other. If you do fraud well, then your customer experience will not be that great. I'm like, no way. No, it's not. It doesn't have to be that way. Your fraud solutions have to be, again, most of the customers we are speaking with, they usually have more than one fraud solution already existing. And the difficulty I see with the existing solutions is the black box nature. So you cannot really control the operating points. You cannot really add new insights into your fraud solutions. And the way we are dealing with this is, and we have created AML, transaction anomaly detection, and ATO, account takeover fraud detection solutions so far, very specifically, but we also have anomaly detection in general. For the ATO and AML, just like I have shown you for retention, you can just bring your data, and we already have all the pre-processing steps for you, and you can see how it works for you. In actually 2 weeks, we can show you whether we can detect fraud for you or not. And the way it works again is really under the guidance of business users. I mean, the fraud managers have to decide how much fraud do they look at, are they able to process, and the false positives and false negatives always need to be managed, and our dashboards allow you to see exactly where you are going to be seeing false negatives as well as false positives, and nobody wants to talk about false negatives, obviously.
Mhm.
And the last thing we see, the increase in fraud detection measures being reflected in the voice of customer most of the time. So we highly recommend that you check how these trends are being affected from each other. One solution and one action obviously affects the other one. I hope that answers the question, but if there are any other ones, I would love to go through more.
Awesome. I wish we had more time. This has been
Thanks for taking
fantastic.
TD out of my heart, so I just had to talk about this.
No, I'm glad you did, because fraud is definitely a topic of interest among credit unions, and yeah, we probably could have just an entire session on leveraging, or how can AI be used in fraud. I'm going to ask one last question. I'm going to have Stephen and Nick, if you want to respond to this is your opportunity. So, looking ahead, what emerging AI trends do you believe will have the most significant impact on credit unions in the next 5 years?
I'll go first, and I'll give a quick answer to this. And I think I would urge everyone on the call is just look at other consumer-based AI tools, AI products that come out, and how other major financial institutions roll out AI. And I think what you'll notice is they'll be large language model focused. And I think credit unions have to embrace that technology early in actionable AI for the member engagement side.
Yeah, I mean, my background is primarily on small business lending. I do a lot with large language models, and their potential just completely fascinates me. But I think specifically when I think of financial institutions, banks, credit unions, they've historically been slow to adopt new technology. And that's, from a change management we talked about earlier, I would imagine, the next 3 to 5 years with the growth in AI, it's going to be extremely disruptive. And I think, waiting for other players to figure it out first will put, credit unions that don't adopt the technology at a massive disadvantage, to the point that I don't know how they could potentially survive if they don't adopt it. And so I think, you have to look at this new technology and figure out ways to adopt it, even if it's starting slow. And I think there's ways to do that in a safe and sound way that you can explain to regulators, and also make sound business decisions with. But I think this is going to be a very, very disruptive technology to the industry, and people are going to be left behind. And so that would be my thought. I'm already seeing it in small business lending, as adopters of better credit models and better technologies are completely dominating that market, and traditional community institutions are kind of being left behind, trying to figure out how they can make up lending volume. So that would be my kind of thoughts.
Awesome. Thank you so much. Sarah, we're out of time, but I am sorry for that. But I wanted to spend 2 minutes just thanking you all. Thank you all for sharing your insights on how AI can help shape the future of credit unions. It's clearly AI is no longer just a futuristic concept, right? It's a tool that's being used right now to help improve operations, enhance member experiences, and just to drive growth. And I love, Stephen, that you had you nailed it at the very end. Is we just can't wait, and there is so much disruption and new technologies coming that if we don't start exploring and experimenting some of these, we are going to be. So thank you for that last sentiment. A special thank you to Stephen, Maya, Nikhil, Nick, Zara for sharing your expertise and your innovation solutions. Your contributions of providing us just a great understanding of the current and future landscape of AI in credit unions. Tomorrow, we invite you all back, credit unions and our panelists. We encourage you to connect with our panelists and go a little bit more in depth into your discussions and explore how these AI solutions can be tailored to your specific needs. So if you haven't signed up for day two is just an hour. There are 10-minute conversations that you can have with each one of our panelists. I hopefully ask Grant to put the link to day two in the chat. I also dropped my email address in the chat as well. If you have more questions or other things that we didn't address today that you're curious about, please don't hesitate to send me an email. I would love to help you get your questions answered. I'll leverage this team of experts in finding those answers for you. So please let us know. One last thing is you will get a survey following this event. Let us know how this was. This is, like I said, our first FinTech adventure. I hope you learned a lot. I hope you got some great insights. That was the whole goal of this. If you want to hear about other use cases and how technologies can be applied, we'd love to hear your ideas for future events too. So stay tuned. We'll share the recording. We will share presentation decks if our panelists will allow it, and watch for more future FinTech adventures. Thank you all and have a great rest of your evening tonight.
Thanks so much,
So
everyone.
long.
Thank you so much. Bye.